Hi everybody, Alex Deployer from Expert Forex, and I hope this video gives you lots of money-making Forex trading ideas. And in today's video, we're going to do a bit of support for owners of the Grid Trend Multiplier. Ever since the Grid Trend Multiplier got first prize in our Forex trading competition, and with some great results. By the way, the winner there achieved 320% return, and that was on only 2 weeks of trading. So that's what makes this quite amazing, and you can see how robust the results are. But since these results have been published, we've had a flood of new owners of the Grid Trend Multiplier, and I want to short circuit their learning curve immediately by showing them how they can very quickly trade the Grid Trend Multiplier. So let's move on. Now, there are 2 channels on YouTube which you can go to. There are 15 videos made up to 2014, and then there are 9 videos made after that. You can go that for training and some ideas on how to use the Grid Trend Multiplier. For instance, there's one showing over 1,000 positive trades in a row, and that kind of thing. This EA has amazing capabilities. After you've watched this, you can certainly go to these for more information. If you are not already the proud owner of the Grid Trend Multiplier, please go to this website. You can purchase it from there. Okay, so let's get straight into the training part of it now. I must warn you, there's a lot of maths involved. And if you don't understand the maths at first, go and re-watch this video 3 or 4 times. It is very important that the penny drops, that you understand what I'm telling you, because this could be a life-changing video. And I'm sorry, I have to really try and hold myself back in terms of those kind of statements, but it certainly can be. Right, so let me explain what's going on here, and I'm not going to go into grid trading in detail. You know, there's a lot of training videos on that particular thing, but essentially what I've got here is a 300 pip grid. It starts at -100 and goes to 200. This is where the price currently is. It's 100 pips from the top of the range and 200 pips from the bottom of the range. We want to sell and go to the bottom of the range, and we want to get out if it goes to the top of the range or past the top of the range. We are using a grid size of 10, which means that for every 10 pips that the price moves, the EA will open a trade. It will be a sell trade, and it will open that trade, and if there's already a sell trade that's positive, it will cash that trade in. If there's already a sell trade at that level, it won't open another one, and so on. So what happens is it cashes in all the positive deals and opens new replacement deals all the time, and that way you also get what we call a multiplication of successful deals. All right, so let's have a look. Let's say we enter a sell at that particular point, and then suddenly the price goes right down 200 pips straight down, and what will we have made? We will have made 200 pips because it's gone 200 pips down. But with a Grid Trend Multiplier, it actually cashes in every 10 pips. So it goes cash in, cash in, cash in, cash in, cash in, cash in, and we will have made that 200 pips. Now, please understand, I have taken the spread out of these explanations. It's not because I want to misguide you in any way. It's to just keep these explanations very simple. So please don't think I'm a fraud and a scam artist or anything. I have just taken the spreads out to make it very easy to understand. Some of these concepts are very tricky, and if you add the spread in, people just will never understand it. So here we go. So off it went to 200, and we made 200 pips. Now, but let's see what the downside of it. Let's say the price goes straight up, just straight up like that, boom, 100 pips straight up. So what it will do is it will open a sell transaction every 10 pips, and that sell transaction will stay open, and it will just open those transactions, and then by the time it reaches the top of the 100, you'll have 100 pip loss on the first transaction, 90 on the second, 80 and so on. And if you add all that loss up, suddenly you've got a loss of 550 pips. So not that great. You've got a loss of 550 pips and you only are generating a potential trade of 200. Now, the big thing here is that we're assuming that the price moves in straight lines. Now, sometimes it does, but mostly it doesn't. And you can see, as we say, the multiplication factor is 1. So in other words, the price only visits each grid level once in its visit to the target or to the stop. And by the way, you can put stops and targets into the grid trend multiplier. Also, just bear in mind, all of this is not your whole account. We don't expect you to risk your whole account. If 550 is your whole account, then you've got to use a micro account, and that will then, hopefully, you'll have a $500 account and you'll only be risking $55 or something like that. But don't risk your whole account on one trade using the grid trend multiplier. Be sensible and trade it like a normal trade. If you normally on a grid trend multiplier, it's good to risk about 5% to 10% of your account on any, and we call this one trade, any group of trades. Okay, so let's move on with that. So that was pretty bad. So let's see, what can we do to improve that situation? So the first thing you can do is increase the grid size. So instead of having a 10 pip grid, we now have a 20 pip grid. So what happens? We're still here at the start of the transaction over there. Now we only have 20 pip grids, but that doesn't mean that we experience less income, because it still is moving 200 pips, so we still make our 200 pips there. But when we go into the negative side of things, now we don't have the ones that we had before at the 10 level. We now only have a 20 level open transaction. So we've got open transaction there, open transaction there, and then when you add them up, now they have gone down to 300. So minus 300 plays plus 200. Now we're starting to get to better risk return type of ratios, but it's still not great, isn't it? So let's move on. Okay, so lesson number 1, and remember, this is an introduction to grid trading. It's taking you slowly through the process. So this is lesson number 1. Reduce your risk by increasing your grid size. The bigger the grid size, the lower the risk. We've seen it doesn't reduce your income at this stage, but it does reduce your risk. Okay, now I'm going to introduce a concept that you may not have thought about previously. And that's the concept of the price visiting the same price level over and over and over again. So what happens in grid trading, so the person would have started there, bought, price went down, you see it visited the same level, but because that was cashed in, it opened another buy, went down, opened another buy, cashed it in. So that's how the process works. You just, when it visits the same level again, you just another buy and you cash it in when it's positive, and so on and so on. So the concept of multiplication is that the price can visit, like, it's not very clear here, but it can visit the same price level, and in some instances we've had 16 times or 12 times. In this case, the average was 6, so or just under 6. So from here to where all the grids were closed was a 110 pip movement, and in fact in this whole process 600 pips were cashed in. So what we say that the ratio was roughly 6 to 1. The multiplication factor was 6 to 1. So and then also notice that the target, this is actually the EA, it's as it was traded, and it's printed on the trading chart. Profit was reached. The person had a $10,000 profit in. It reached the target and stopped. So there are stops and targets in this process of different natures. but we'll look at that at a later stage. The most important thing about this slide, and I implore you to look at it very carefully to convince yourself that the price visits the same price level over and over and over and over again. And that is why we call it the grid trend multiplier. It multiplies. In this case, it multiplied a trend of 110 pips to 600 pips. Now, that's a big multiplication. And this only took place over a period of 3 to 5 days. So not a long period that this particular deal happened. But you can see how many pips were cashed in compared to the actual price movement. So remember the multiplication factor. So let's go back to our calculations now and say, all right, now we've got the same calculations, but let's take the multiplication factor into account. Now, I'm going to just use, to be conservative, a multiplication factor of 2. So what we're saying is that the price will visit the same price level on average twice. So it will zigzag its way down over here, and by the time it reaches here, it will have touched the same price level twice. So instead of earning 200 pips, you will have earned 400 pips. Okay, now when you go the other way, before we had a loss of 550, but because it's visiting the same level twice and cashing in and creating new transactions, it made 100 pips going up, so it reduced the loss to 450. So now all of a sudden 450 plays 400 is not so bad anymore. We're getting closer to where we want. So let's have a look at where the grid size is 20, and we use a multiplication factor here. Again, on the way down, the same thing will happen, and you will generate 400 pips. Now on the way up, because you are cashing in twice on every single price level, again you will have earned an additional 100 pips, and instead of having a minus 300, you now have a minus 200. Now all of a sudden we've switched the thing around, because now we have a small loss and a big target. So now we are using a 2 multiplication, our risk return ratios suddenly become 2. Now all of that is because of the multiplication factor, and we've only used the multiplication factor of 2. Could be, it could be a lot higher, as we saw in the example that I showed you. That example had a multiplication factor of 6. So let's have a look at what multiplication factor of 6 does. So on this particular grid, where the grid size is 10, you go down here. Now you have to multiply your gain by 6. So multiplication factor of 6 has a gain of $1,200. But if you go this way, you have the same risk exposure, but because you're cashing in 6 times every time the price visits the same price level at least 6 times, you effectively getting 600 positive pips coming in, and you incurring 550 negative. So you actually make a profit. You actually make a profit going that way. And that's the other thing you must understand about the grid trend multiplier. You can make a profit trading the wrong way. Now, I'm going to say that again because people don't understand or believe that. But you can make a profit. Not always, but you can make a profit trading the wrong way. And here's a calculation that shows you that. So that should actually mean plus 50, but I'm putting in minus 50 because then the risk to return calculation works out a little bit better. But now you're talking about a 24 times risk return relationship, incredibly big, and that's because of the multiplication factor that we've used there. But we've seen that even a 2 multiplication improves things tremendously. Now if we look at the grid size of 20, same thing. On the way down you are generating 1,200 pips. On the way up you are generating, because you are cashing in 6 times every time it touches a grid level, you are generating plus 600 pips. Now again, 600 plus 600 minus 300 is plus 300. So in fact you're making a profit. You're actually making a profit at that point. I'm just putting in minus 30, so again, just to give you a rough idea, because then your risk return ratio becomes 40. So this is a way of dramatically improving your risk-return ratios on trade. Now again, as I say, there's a lot of maths that I've just thrown at you here, but please stop the video, go through the maths, make sure that you understand what's going on. But this is as close as I have ever seen to be the holy grail of trading. Now again, I'm sorry about trying to sound dramatic, but it's pretty close to the truth. And the reason is that we can actually quantify that. We have been selling this EA for 7 years, and this is a licensed EA, so we can actually tell who is using it and how many times they're using it and on which computers they're using it. That's about all we can tell, but we can tell usage. Now there are people that have bought this EA 7 years ago, and they are using it on 10 to 20 charts. Now that tells me that these guys are using this EA flat out for 7 years. All right. Now, sorry, again, I'm getting a bit too excited about it, but I just want to say that these are not flippant remarks. They are quantifiable remarks. We can actually go back into our licensing records and show you that people are using this EA all the time because it is so good. It reduces your risk return ratio to negative, because in this case, as we've seen, you're actually making a profit when the prices reach up there. You're making a profit, and that's not the purpose of the grid trend, but that's one of the small advantages that it has. So you can trade it in the wrong way and still make a profit. So income lesson number 2: trust the natural market price action, where it visits the same price level over and over again, to multiply your gains and reduce your risk. As I said, this is an introductory video. There are still some more advanced techniques that I'll show you to even improve the situation here. But it is, if you look at it, it's a very simple automated trading technique. It simply cashes in positive deals when a grid level is hit, and it opens new trades at that particular level. As simple as that. But it makes its money from the price hitting the same price level over and over again. As we've seen, you can make money if the price goes the wrong way. So there's a bit of safety built into this technique. The natural price action improves your chances. Now, again, everybody knows the price doesn't travel in straight lines. It travels in waves, and it sometimes stays in the same range for a very long time. So the natural price action improves your chances of success. And then, as I said earlier, this is introduction. There are many other risk reduction methods in future videos, but what you've seen today should convince you that this is the only EA that you will ever need to trade ever. Because if you think about it, all you have to find currencies that will trade within a certain range over a certain amount of time, and that becomes a lot easier the bigger the range you use. So I've used a 300 pip range. You can use a 600 pip range. You can use a 1,000 pip range. Improve your chances of success. But and you can use different grid sizes and all that type of thing. But the principles that I've shown you today should be enough for you to severely influence your risk return ratio on your trades. And that is what makes money. If you can risk 1 to make 20, then that is the answer in Forex trading, especially with the high leverage that this industry provides. The other thing, as I've mentioned earlier too, is you don't need to risk your entire account on one trade. A lot of the GMT owners think that they have to take the GMT and put it on their account and just let it run until it blows up or makes them a fortune. No, there's no need for that. You trade the GMT trades as you would normal trades. They all have stops, they all have targets, and I think I have a slide on that. Let me just quickly show you. So here's a slide where you can set your profits and your targets. So yeah, you can say, all right, I want to have $500 target. So there's a 500, or you can do it as a percentage of your starting balance, or you can do it as pips. And the same thing on your loss. You can actually set. So the grid trend multiplier has really good risk control in it, and you do not have to risk your whole account. Only risk 5% or 10%. The other thing is your success rate is so high when you're trading these high risk return ratios that it doesn't matter if you have a couple of losses. If the price runs away and shoots up suddenly 200 pips in a straight line and you incur loss, so what? You just keep on trading, because the natural price action in the market is to revisit the same price level over and over again. And as you've seen, even if you get the direction wrong, it is still possible to make a profit. So there are so many safety nets when trading the grid trend multiplier. So this has been an introduction to grid trading. I hope that the penny drops. And if it hasn't, please re-watch this video until you fully appreciate the power of the multiplier when trading the Forex market. Now, as you might know, we are starting a trade setup service where we will identify trades that are suitable for the grid trend multiplier, and we will suggest the type of settings that you use to take best advantage of these trades. This is a freestanding service because it also covers other EAs and it also covers the market in general. So it's a general setup service that will be provided. It is a paid service, and we have full-time traders looking at this particular service. Now, I hope I've given you lots to think about in this particular video, and please watch out for the next video where I will show you a few more advanced techniques on how you can reduce your risk even further when using the grid trend multiplier. From me, Alex Employee, cheerio. Thanks for watching this video. If you've liked it, please give it a like. If you haven't subscribed yet, subscribe and click the bell. But most importantly, share this video. You can do this in many ways. Message your friends, send them emails, or share it on social media, on Facebook, on Twitter, and those kind of places. So from me, Alex Employee, cheerio.